as, of course, markets as well. But let's get now to the market implications now with Shana Sissel. She is founder and CEO of Banríon Capital Management. And Shana, let's start with the broader macroeconomic environment and how that's informing risk assets right now. You can see that the S&P 500, it's still down on the day, but it is recouping some of those losses. What do you make of the setup right now as we still hover near these all-time highs?
Well, we've had some very strong economic data, notwithstanding what we just heard. And that has led people to believe that even with higher rates, we can still have strong economic growth. Now, that said, the data that just came out, I think, is favorable for the folks who want the Fed to cut rates. Anything that can show potential softening in the economy would be a good thing, because we've had very strong GDP growth. The job market remains tight. Inflation remains elevated. And so the Fed is going to be looking at data points that indicate that the economy is starting to soften to justify a rate cut, which I think is exactly what they want to do. And up until now, there hadn't been a lot that they could point to say that. So overall, I think the markets are really looking at the overall trend. There was this feeling that higher for longer was bad. But higher for longer is not so bad if the economic growth is 3 to 4%.
Well, Shana, I'm glad to have you with me because let's talk about the ultimate risk asset, and that is Bitcoin, of course. The red headline crossing the terminal right now that Bitcoin surging to its first record high since November 2021. It has been quite a journey to get us there, to say the least. And I mean, talk to me about that, because you think about the difference between November 2021, when Fed funds were at zero effectively, and where we are now, you know, well above 5%. What do you make of those types of moves in this market?
Well, obviously, risk is on. People want to be in risk assets. And so Bitcoin is the ultimate risk asset. I think the launch of the 11 Bitcoin spot ETFs has a lot to do with driving market demand. You know, if you look at the actual available liquidity in Bitcoin, like something like 85 to 90% of Bitcoin is not liquid. So that's that 10% that those spot ETFs are playing with, and the flows into those funds are tremendous. You know, I believe there's 4 that are over $1 billion, and the BlackRock one is at like 9. So, you know, if you think about it, the flows into these products are very strong. So I think those two things are part of the story. And then you have the halving that's coming up in April, which will also push the price up. So a lot of tailwinds for Bitcoin right now, not the least of which is that people are more likely to take a chance on risk assets.
All right, really appreciate that. And of course, you mentioned those spot Bitcoin ETFs. Those launched in mid-January, like you said, upwards of 10 or so that actually launched as new ETFs. As an investor, how do you do due diligence on those products, given that they all hold the same thing? What does that process look like from your shoes?
For me, I look at who the issuer is. So obviously the big winners, Fidelity and BlackRock, they have overall trust. They have a lot of experience just running ETFs. For me, I prefer Bitwise's BitB because this is a firm that has been dedicated to the crypto space for years now. I first met Matt Hogan in 2017 when they were just getting up and running, and he has really been able to help with the advisor market. They're very good with education. They're very dedicated to the space. So I'm encouraged that people see that. For me, it's all about the issuer. I want to be with an issuer that knows what they're doing and that is dedicated to the space. So I tend to prefer something like BitB versus iBit or Fidelity's product, which have obviously been the two biggest winners because just the large scale of the firms behind them. But for me, the due diligence becomes about the issuer and not necessarily the underlying.
Fair point there. And you take a look at BitB. It is one of those ETFs that has over $1 billion in assets already. Total market cap looks like $1.8 billion at this moment for BitB. But talk to me about the rest of the risk asset universe, because obviously you have Bitcoin ripping to record highs. But then you take a look at some of these riskier parts of the equity market. For example, you have small caps. And it feels like even though they had a great end to 2023, they just haven't been able to keep up that momentum in 2024. Just quickly, what are your thoughts on that space?
Well, here's an interesting stat from Strategas that kind of blew my mind. 75% of the return of the Russell 2000 is from supermicrocomputer, which is now going to be added to the S&P 500. So this should be interesting to see how that impacts small caps. 75% of the returns of the Russell 2000 are attributed entirely to supermicrocomputers. So it's not necessarily a great thing for small caps, but if you believe that we're going to have some softening in the U.S. economy, and you think about what happens as we get into later stages of the economic cycle and then start a new economic cycle and you get back in early stages, that's actually typically favorable for small caps. That said, small caps have not behaved at all like they would historically based on, things like new bull markets and just watching market trends. But I think it's because they're not as exposed to the bigger trends other than supermicrocomputer and AI and cloud computing and things of that nature. There's not a lot in that space that has exposure there. And I think that is one of the greatest headwinds in the space.
All right, Shana, stick with us. We haven't even talked about AI yet, but you're just going to sit tight for a couple minutes because we're going to take a quick look at what's moving underneath the markets now with Bloomberg's Emily Griefeld. And let's welcome back now Shana Sissel. She is founder and CEO of Banríon Capital Management. And Shana, we were just talking about AMD there, and I want to keep the conversation going on the chip sector because, of course, Nvidia is just stealing headlines, stealing eyeballs, really carrying this market forward. Of course, we did get Nvidia earnings a couple of weeks ago. How are you thinking about this just mega cap company now and the fact that so much of the market's gains and euphoria really seem to depend on it?
Well, full disclosure, I own the stock. So I'm happy about this. I think that Nvidia is uniquely positioned. They don't have a lot of competition. There's too much demand for their chips. They are not able to keep up with the demand for their chips. They're in a lot of really core markets. We talk about Nvidia with AI a ton, but data centers and autonomous vehicles are a huge part, not to mention the foundational business that kind of started the company, which is the GPU chips. So they have a lot of opportunity here. There's a lot of demand. They don't have a lot of competition. And so all those reasons are really positive. I heard someone say recently, like, this is 1999. This is the tech bubble all over again. And I want to really point out that that is not the case. This is a cash-rich company that is growing revenues at triple digits. And that is very different from what we saw in 99, where we had, companies that were going up and up and up with no earnings, no cash flow, no real business. This is a real business making real money that's cash flow rich. And for those reasons, I think that it's going to continue to benefit from the tailwind that comes with this AI revolution, which we're really only in the second inning of. And they are such an important component of that.
And it's also a mature business as well. Of course, Nvidia has been around for decades. It's not like it's a totally new kid on the block. But to your point that it doesn't have a lot of true competition, let's bring it back to AMD. AMD is trying to develop the chip that will rival Nvidia's lineup in some senses. How long will that head start truly last for Nvidia?
I think it lasts pretty long because as people are developing new technologies related to AI, they're going to be using Nvidia as a default chip. And once that technology becomes dependent on their chips, it's really hard for somebody new to break in unless their chip is substantially better. And I don't know much about what AMD is working on and how much better it is than the Nvidia chips, but also Nvidia has a great market share of all different types of semiconductor chips for all different areas of the market. So again, I think that it's a well-rounded business. It has, as you point out, been around for a long time. I have been following it since 2000 and watched it get included in the S&P 500. I think it was like 2002. So it's a long tailwind here. And I think that, there will be people who obviously want to come into the space. Obviously, there's demand. Nvidia can't keep up with demand, so there's going to be an opportunity for somebody who can kind of fill in the gaps. So Nvidia needs to really focus on being able to increase their production and make sure that they can meet demand so somebody like AMD can't sneak in there to take advantage of that.
Absolutely. There's a lot of rivals that would love to just chip away at that market share. But let's shift gears a little bit here, because in addition to the chips, Nvidia, et cetera, I know you're also favorable on some of these energy names as well. Diamondback Energy in particular. What's the opportunity set in that name?
I think Diamondback is interesting because it's one of the few independent producers that actually can make good money and have strong margins on oil at lower numbers. So their break even is like $50 a barrel, which is different than some of the larger producers, which need higher energy, higher oil prices in order to really have good profits, good revenues, good margins. And they're very much executing well. Financials are very strong. Management is strong. And the company has the opportunity to either be an acquirer or be acquired. And these things give it a lot of flexibility. It's one of the reasons why I really like the stock. It's also trading, relatively at a reasonable multiple. And so, these are things I look for. There's not a lot in the energy sector I love, but that is a stock that I do like that actually has done quite well. And it has a great ticker.
Yeah, the ticker there, of course, is FANG. Shana, really enjoyed this conversation. Come back soon. That is Shana Sissel. She is founder and CEO of Banríon Capital Management. Now, still ahead.